Great. Hi, everybody. This is John Garner. I am the founder and CEO of Free Model, and this is Gabe Bodner. I'll let you introduce yourself.
Hello, everyone. My name's Gabe Bodner. As John said, I'm with the Bodner team in One Trust Home Loans.
And Tina as well. Tina, want to introduce yourself?
Yes, my name is Tina Flores. I'm on the growth marketing team here at Remodel.
So I think it's 11:02. We can wait for a minute, or we can just go ahead and get started. What do you think? Just go ahead and get started.
I'm ready to rock and roll when you are. Looks like we just
Yes.
had another attendee join, so good timing.
Okay, great. Let's get going. Okay, great. So let's kick it off. So the plan for today is we're going to do two presentations. First, I will talk about Free Model and how we provide a key component to the renovation reverse service that we're talking about here. And then Gabe will come in and talk about OneTrust and what they do as part of offering the reverse mortgages following a Free Model renovation. So I'll go first and kind of jump in right now. See if I can get going here. Perfect. So high level, so Free Model is a full service concierge provider. So for you to know us in the real estate industry, we design, manage, and pay for typically pre-sales renovations, but we realize that we can also do this very effectively for folks that are getting mortgages as well, and specifically reverse mortgages. So we'll kind of explain how this all works coming up here. So the key thing to note is that 78% of baby boomers plan to age in place. So as you're out there calling on prospective sellers, you're going to hear sometimes that people would love to sell at some point, but they're just not ready to yet. They like to live in their homes. And the question is, when you have that conversation, do you simply say, well, goodbye, I'll call you in 5 years? Or do you want to be able to offer some sort of solution or advice to those folks? And that's what we're recommending that you can do here, is give them some great advice that's going to help you build a relationship for the long haul. And so the reasons why you might want to recommend a reverse mortgage, this is a mouthful. Why recommend a renovation reverse mortgage? Is to, number one, it increases the value of your client's home. And so then that has a lot of different positive effects. Number one is it helps them borrow more money on their reverse mortgage now, because the reverse mortgage is partially based on the value of the size of the mortgage is partially based on the home value. You can also actually get more money in the first year, which Gabe will explain how that works. And then finally, when you sell the home in a few years' time after they've aged in place, the home will be worth more and ready for sale at that time. So it really is a massive benefit all along the kind of time frame here. The other nice thing is that once they do the renovation, they can age in place in comfort. That's both from a cosmetic perspective, you have a nicer home to live in, but also enhancing the ease and safety for somebody who might be older and having a little bit more difficulty getting around. Another nice benefit. And the client, just like a pre-sales renovation, the client pays nothing out of pocket. So Free Model will, again, design, manage, and pay for the renovation. And then that renovation is paid for out of the proceeds of the reverse mortgage, so that they literally pay nothing for the renovation and then get to live in the home fully renovated. And then that renovation ultimately doesn't get paid off until the home sells. And if it sells for substantially more, as it typically does, you've effectively offset the cost of that renovation entirely. So it's really a huge win and a really kind of a neat trick, frankly, that you can help these folks achieve through some financial engineering. So why Free Model in particular? So what Free Model does here is that we provide local in-person project directors. This is very different than other folks in our industry. So that means that when you work with us, the project directors can come meet the homeowner in the property, talk about what they want, maybe talk about age and place features, and then develop for them and manage for them the project they want. We also have over 800 trusted subs, which means we've got a deep resource bench to help deliver on these projects. And our project directors and our design team can provide great design. So if you're doing something more complex, like a big kitchen, bathroom renovations, moving interior walls, we can handle all that work as well. Next, from a business perspective, again, zero upfront costs. All the cost of the renovation is paid for out of the loan proceeds. So it's literally zero to the homeowner. We are always targeting increasing the value of the home by 2x the spend. And based on our experience in pre-sales renovation, we know that we achieve that goal. We achieve the goal of a 230% ROI, so a little bit more than 2x typically for our homeowner clients. And again, we provide a fixed price contract. So that means we detail every scope item, every material item, and then we stick to that price. As long as the scope doesn't change, the price doesn't change. So that means there's no surprises for your homeowners. And in terms of qualifying, it's quite easy. So what we look for is that there's sufficient equity in the home to pay for the renovations. And in the case of a reverse mortgage, the way that math works is what is the current loan balance plus the free model price plus the closing costs. If the combined amount of that is less than or equal to 80% of the estimated reverse mortgage amount, that project's going to qualify for a free model. And typically with these situations, there's usually a ton of equity. And so it's usually substantially less than that percentile based on our experience with pre-sales renovations. And then when we do our agreement, we just sign a simple home improvement contract, and we do put a deed of trust on the home as a security instrument. But when the loan is closed, we're going to basically retire that deed of trust, provide a sub and recon, and then that'll get retired as soon as the loan is closed, and then you'll have a new deed of trust with a new first lien reverse mortgage. And of course, we provide a 1-year warranty on our work to make sure that there's any problems, we'll come back and make it right. So in terms of what we offer, so we provide full health and safety. So what's interesting about this loan situation is that you need to make sure that there are no health and safety issues in order for the loan to qualify. We'll make sure that's all taken care of. We can do all the cosmetic upgrades. We can go as far as, full kitchens, full bathrooms, and we'll do all the design and permitting. So we do all the steps. In terms of what we'll do, it's everything from, decluttering, dehoarding, that's kind of a typical thing. Again, handrails, grab bars, kitchen and bath safety features, home technology and automation that can help people, manage their homes more easily as they get older. And the way to think about the scope of work we'll do is really anything that doesn't involve moving the exterior wall. So anything in the envelope of the home, but that means anything. So it could be, again, full kitchens, bathrooms, electrical and plumbing, full landscaping, roofing, cleaning, staging. We just typically don't do additions or build ADUs or build new homes is the main things that we typically avoid. So here's how the process works. And this is an integrated process between Free Model and OneTrust. So it starts with a pre-qualification call with Gabe or one of his peers. And so they will estimate your eligibility and the available equity based on that first conversation. Once you get the go-ahead from Gabe, then we'll dispatch a Free Model project director, again, one of your local people, to come meet you at the property, meet your client at the property, discuss the scope of work, what kind of finishes they're looking for, what their goals are. Then that project director will draft the scope of work, pick out the materials, and deliver an initial estimate, initially for discussion, kind of back and forth, and then we'll deliver a final bid that includes the fixed bid quotes from our subs and the final selections on materials. And then once that's done, you know exactly what the project's going to look like. Then you do your formal application for the mortgage. That gets submitted to Gabe or one of his peers. And then he will have the house appraised. An interesting thing here is that we're going to appraise the house based on both the as-is value, but also the after renovation value based on the scope of work. So that's going to give you that greater home value that you can then get a bigger loan amount against. Once the appraisal is done, you're formally approved, then we will sign the Free Model contract. We will go forward and buy the materials, get all the subs moving, complete the job. And then finally, once the job is totally done and the homeowner signed off, then Gabe and team will come in and close the loan, pay off Free Model, also likely pay off if there's a pre-existing mortgage, also pay off the pre-existing mortgage. So all the other debts are taken care of on the property, and now the only debt remaining is the reverse mortgage. And then they all go on living in their home until they're ready to move forward with a sale later on. And so to give you a sense of where we are, our project directors are spread all over through our service territory. So you can see every red star on this map is a Free Model project director. And generally what that means is if you're doing a job that's in a reasonably populated area, you're going to have a project director that's within 20 or 30 minutes from the job. So there's Northern California, Southern California, from Santa Barbara to San Diego to the Inland Empire, multiple markets in Texas, Dallas, Fort Worth, Austin, and Houston, and San Antonio coming soon, as well as all the major markets within Florida, the Eastern Seaboard, Orlando, Tampa, St. Pete, Jacksonville. So one other nice benefit is if you refer a project to Freemodel and we close that project, we will provide a $1,000 budget for you for co-marketing. So what typically we do that with some of our pre-sales partners. And so you would develop a postcard for that would promote yourself and do pre-sales renovations for your clients. You would then execute your typical mailer and then show us the creative, and then show us that you've done the mailer, and then we will reimburse you $1,000 for that marketing. There's a little bit of free model branding on it, but mostly it's there to sell you as the agent and selling pre-sales renovations as a way to help win listings. Case studies, I'll just show a few. I think you know generally the gist of what we do, but we have done over 700 projects, and during our time in pre-sales renovation, we've helped our agent partners earn their sellers an incremental $90 million of profit. And so we can achieve a similar lift in values for pre-sales mortgages. So here's an example in Oakland where we spent I don't know what the spend was here, but we increased the equity $225,000 on this condo in Oakland. You kind of see these before and afters. And then here's an example in Hercules in California, a lift in value of $65,000. Again, going from kind of drab to bright and white. And then here's one in Fullerton in Southern California. We were able to increase the equity here, $265,000 over about a 5-month project. So kind of drab, old brown, and pretty messy home beforehand, but now beautiful, light and bright. So we've got 250 case studies on our website. If you ever want to see more, you can go check them out online. So I will stop there. And if there's any questions about Freemodel, I'm happy to answer questions. And then after that, we can hand off to Gabe.
Awesome, John. It does look like we have a question from someone asking about Southwest Florida, if Freemodel's serving this area yet.
Great question. I don't know the exact answer. If you, what I would say is send me a specific email. I'm John at Freemodel of the location where you are. Give me a more specific example than Southwest, because we have project directors sort of spread all out, and I'll give you a response about whether we can serve that market.
Thank you. Sounds like Charlotte County, by the way.
Okay, great.
Okay.
In general, the other thing is if you want to submit a project just in general, you can always go to freemodel.com. And the way we take in new projects is there's a form you can fill out. It says you just click the Let's Talk button, put your name and information in, and somebody will call you. We have reps that manage Florida. And so we can have a dialogue immediately about any project and tell you specifically whether that project qualifies.
Awesome.
Any other questions?
That's it.
All right, let's go to Gabe.
Sounds great. Well, let's thank you for that, John. Appreciate it. I will share my screen now and share my slides. Again, my name is Gabe Bodner. As John said, I'm with the Bodner team of OneTrust Home Loans. And ultimately, as John talked about what Freemodel does in regards to the renovation and how that the cost structure works and so forth, I'm going to tell you a little bit more about reverse mortgages and how that ties into the Freemodel business as well. Before we jump into that, I'll just quickly tell you a little bit about myself. But I am a retirement mortgage planner and educator. I am based in Boulder, Colorado. Colorado is one of the markets that will be coming soon, but we are not live with Freemodel yet in Colorado. And I've been in the mortgage space originating over 22 years now, specifically reverse mortgages for the last 8 years. So again, a little bit about myself. Let's start with what you need to know. So first and foremost, as it relates to the renovation component, again, as John said, there is zero upfront cost. These costs are going to be paid as part of the reverse mortgage closing. With the renovation, ultimately improving the home's value, it will also increase the available funds to that homeowner. We'll show you an example a little bit later, but that is a huge component. By increasing the quality of the home and condition of the home, it inevitably is going to increase the value. And because of that, it will increase the available funds. On the reverse mortgage side, one of the most important things to note is that there's no monthly mortgage payment required. It's as simple as that. They being the homeowner, still have to pay the property taxes, homeowners insurance, and HOA dues if there are any, but there are no monthly mortgage payments required of principal and interest. It allows you to convert equity to cash, right? Equity in itself, believe it or not, is useless. I know as realtors that might be hard to hear, but equity is useless until you either sell the home or leverage the home. And with free model, typically doing a pre-sales renovation, it's a great way for that homeowner to increase their net proceeds by doing the renovation. In this case, we're talking to clients that may not be ready to sell, but want to age in place. So again, converting some of that equity to available cash and ultimately improving their retirement. That's huge, right? Improving their retirement, improving the quality of life, improving their home standards so that they continue to age in place. What's in it for you? I get it. As realtors, you guys are looking to buy and sell real estate for clients. These clients aren't looking to sell yet, right? So inevitably, we have to understand what we're doing here. We're trying to help clients, again, live a better quality of life in retirement. By setting them up for this and helping to do this for your client, you're establishing trust. That is the most important thing we believe in this relationship is trust. You're providing a value to be a resource, an ongoing resource for these long-term clients, because it is a long-term relationship. They may not be ready to sell today, but inevitably when they are ready to sell, they will think of you. Keep in mind that by increasing the value through the renovation, they're increasing their availability of funds. They can use those funds for anything, to include purchasing another home, whether that's an investment property, a vacation home, or gifting money to an adult child for them to purchase a home. So we find that in many cases, an increase in valuation allows for additional transactions as well. And once again, when they do go to sell, or when the adult children ends up inheriting that home and they sell, they will think of you because of that trust component that I talked about that you're establishing by making the right recommendation for these folks that are looking to age in place. And like I mentioned before, helping clients maximize their retirement. That's huge. There's a huge, again, opportunity for you guys and us to serve a community that's very underserved. Right now, we've got 12,000 baby boomers hitting 65 years old every single day in our country, and 1 in 3 of them plan to move somewhere else. There's a huge opportunity. Again, 39% of all home buyers last year were baby boomers or older, right? That's a huge demographic of potential buyers and sellers for you. But at the same time, as John said, 78% do want to age in place. So you're not going to be able to sell everybody's homes, unfortunately, not yet. And at this point, for aging in place, 78% of seniors, what can we do to help them do that better? I'm just going to rattle off. This is a laundry list of issues, right? What I call the perfect storm. But again, we've got 12,000 people aging up to retirement age right now in our country, and a laundry list of concerns, right? We've got long-term care issues and costs. We've got inflation. We've got fewer pensions and defined benefit plans, meaning people aren't receiving pensions. They have to save money in an IRA or a 401k for retirement. Long story short, people are going to outlive their wealth. If all baby boomers retire at age 62, 84% are in jeopardy of running out of money before they die. That's a huge concern of mine. And again, if all baby boomers retire at age 66, half are still in jeopardy of running out of money before they die. And yet there's $11 trillion of senior home equity sitting on the sidelines that can and should be utilized strategically. That's once again where the reverse mortgage component comes in. So now let's talk about what a reverse mortgage is. Okay. It's simply a mortgage that can increase the purchasing power for a buyer. That's right. You can use a reverse mortgage to purchase a new home. Okay. It's also a mortgage that allows a homeowner the ability to access some of their equity without requiring monthly payments, as I said. So if you've got a client that's not ready to sell, that wants to age in place, that has a significant amount of equity, this could be a great option for them. We offer a variety of products. The traditional reverse mortgage product, also known as a home equity conversion mortgage, that's the HECM acronym, home equity conversion mortgage, is available to homeowners age 62 and over. However, we also have programs that start at age 55. Not available in all states, by the way, but in almost every state, age 55, you can get into a reverse mortgage product. There's fixed rate, there's adjustable rate, again, all kinds of options. One of the main components that I like to talk about when it comes to the reverse mortgage is this line of credit. This line of credit is a great way for folks to be able to access some of their equity on demand. It's kind of like a HELOC or a home equity line of credit that they can access and withdraw equity as they need it. But unlike a HELOC, with the reverse mortgage line of credit, their available funds grows over time, giving them access to more and more of their equity while they live in the home, which is one reason to get it now when they don't need it, so that when they do need it, the available funds are greater in the future. This is simply a loan that accrues interest over time. Unlike a traditional mortgage where you're taking cash out of your pocket every month and using cash to make payments, and in exchange you're accumulating more equity, this product is using the equity and deferring the interest. That's it. You can still sell the home at any time, which leads me to my next slide, which are some of the largest misconceptions that people have about reverse mortgages. So, number one, the home must be debt-free before a client can qualify. Absolutely not. Certainly it can be free and clear, but it doesn't have to be. One of the most popular reasons we do this is actually to pay off an existing mortgage or a HELOC to eliminate that mortgage and eliminate that mortgage payment. Number two, the borrower or the heirs will be left with a debt in excess of the home's value. That is not correct. These loans are non-recourse mortgages. I'm going to touch on this again a little bit later, but a non-recourse mortgage guarantees that the homeowner cannot pass a liability onto the heirs. Okay, which means if the loan balance ever exceeds the home's value, okay, the homeowner isn't responsible for that shortfall, and they cannot pass that shortfall on to the heirs because the FHA mortgage insurance covers that deficit, which again gives us that protection and security with this being a non-recourse mortgage. That's one of the biggest misconceptions with these products, and people get concerned that they may pass a debt or a liability onto their heirs if they live too long or the home value goes down. It's impossible. It cannot happen. Next, I'll no longer be able to sell my home. Incorrect. Okay. This is just like any other mortgage. You just have to pay the loan balance off when you sell the home, but you can sell the home at any point in time. We have many clients that do the reverse mortgage for a specified reason and for a specified period of time. Again, if we do the renovation and reverse mortgage combination, improving the home, improving the value of the home, allowing someone to be more comfortable, then they go to sell the home, absolutely fine. They pay off the mortgage and that remaining equity is theirs or the heirs to inherit. Next, the lender takes ownership of the home. Not correct. Again, this is just like any other mortgage product. We put a deed of trust in place, which is recorded against the title, and that loan needs to be paid off, paid back to the lender with the interest in the future. But the homeowner continues to retain ownership. Lastly, although there are other misconceptions, but lastly for today, a reverse mortgage is only used as a loan of last resort for seniors without other assets. That has been the most common use case, right? For folks as a loan of last resort, as I call it, where they have no other option. However, it's been proven mathematically, if you use a reverse mortgage earlier in retirement, not only can it improve quality of life and cash flow, but can actually help protect against unnecessary taxes by liquidating other taxable accounts. So again, this is just a short list of misconceptions, but hopefully this gives you an idea of some of the reasons that people may have had a bad impression about reverse mortgages that are incorrect. Let's talk about some of the fundamentals, okay? How much equity can I access? The amount of equity is based on three main components: the age of the borrowers or the homeowners, current interest rates, and the home value. Let's talk about it really quickly. The younger someone is, meaning the age, the less they can borrow or the lower the loan to value, okay? Based on actuarial tables and life expectancies. So someone who's closer to 80 years old is going to be able to borrow closer to 50% of their home's value, while someone at 62 years old is only going to be able to borrow around 30% of their home's value, i.e. a lower loan to value, being that it's age-based. Interest rates have an impact here as well. And then home value. Now, with home value, again, this is a component that in many cases we don't have control over, right? The home's value is what it is. However, when we're incorporating a reverse mortgage with free model and the renovation, this is a major component that allows us to get a potential bump in home value. Now, John mentioned that the goal is 2 times the renovation budget, not always attainable, but we are almost always going to get a pretty decent bump in the home value. Whatever that is, we're going to get an increase in the available equity. I'm going to go through an example here in a little bit, but again, a great piece of this overall equation. 3 ways to access the equity. Okay, you can do 1 of 3, 2 of 3, or all 3, meaning you can do a combination. A lump sum. That's when we're going to pay off an existing mortgage or take a lump sum of cash out. This is also how we're going to pay free model at the end of the project. Okay, we're going to take a lump sum of cash and pay off and pay back free model for the renovation. Number 2, a monthly payment plan. Now, this can be a monthly payment plan for a defined period of time or for life. Okay, depending on the age and the amount of available equity, we can set that up to receive an income. Or that revolving line of credit that I talked about earlier, which can be set up in place, grow and grow and grow, so it's worth more in the future when those funds are needed. And once again, you can do a combination of any or all of these. Looks like we may have a question, so I'm going to jump to the question real fast. Or maybe it's a comment. So thanks, Linda, and I'm glad you're an SRES. Fantastic. So glad to hear that. All right. Again, let's compare. As I mentioned, something about non-recourse. Here's where I want to go through it in a little bit more detail, but just a side-by-side comparison. With reverse mortgages compared to traditional mortgages, we don't actually have a minimum FICO score, which makes it a lot easier to qualify for these mortgages. I mentioned earlier, there's no required mortgage payment, okay, of principal and interest. Obviously, with a traditional mortgage, once you have that loan in place, you're required to make that monthly payment. With the reverse mortgage, you're not required, but you can, making this what I call an optional mortgage payment. In some cases, there may be some benefit to making payments, but once again, it's not required. As I talked about earlier, this non-recourse feature, that does not exist with traditional mortgages. Believe it or not, between 2007 and 2010, there were many cases across our country where people ended up owing more on their homes than their home was worth due to the downturn in the housing market, as we all know, unfortunately. And if those mortgage balances exceeded the home value, the homeowner was responsible for that deficit. With reverse mortgages, again, that non-recourse feature is an amazing protection for the homeowner and the heirs. The term of these loans, we call it a maturity event, meaning when this loan is due and payable is upon a maturity event. Those maturity events are either selling the home, permanently leaving the home, meaning you no longer occupy the home, or when you pass away. The loan becomes due and payable after you pass away. unlike a traditional mortgage where there's a defined term or period of time, typically 15, 20, 30 years. Last difference here under income requirements. Similar to FICO score, much, much easier to qualify because we're not utilizing a debt to income ratio. So many people in retirement living on a fixed income have a harder time qualifying for a HELOC or a home equity line of credit or a cash out refinance. We're utilizing a residual income calculation, which again, much easier to qualify for. Everything below, same. Reverse compared to a traditional mortgage, same. So hopefully this gives you an idea, again, of the big differences between a traditional and a reverse mortgage. Let's look at an illustration rather that I briefly touched on earlier or said we were going to talk about. This is if you're in the field, okay, you're out there talking to potential home sellers, and you've got a client who doesn't want to sell and they want to age in place, right? So this is John and Jackie, 62 and 65 years old, looking to age in place. And ultimately, as they're approaching retirement, they do not want to have a monthly mortgage payment, but they have significant equity in the home, right? That is a perfect case study for us. The estimated home value is $800,000, and their home needs renovations or upgrades that are going to be about $125,000. So as we look in this column right here, the before remodel, okay, again, $800,000 as is value. Given their ages, they're going to be able to borrow about 33% of their home's value, given their ages. Again, based on an as is value of 800, that means they're going to be able to borrow 264. Now, there's one catch with reverse mortgages, and that is you're limited to only 60% of those funds for the first year. So in this case, again, they're able to borrow us 264, limited to 158 for the first year. They've got a mortgage of $100,000 that needs to be paid off. And there's fees roughly of about $20,000, which means their mandatory payoffs here are $120,000. If they can only borrow 158 for the first year and they've got 120 in mandatory expenses, that's only leaving them $38,400 in total to be able to do this renovation when they do a traditional reverse mortgage. It doesn't work. It doesn't work, which is why we've partnered with Free Model, because we've found that in many cases, homes do require, whether it's health and safety issues, peeling paint, roof, you name it. But at the end of the day, this model right here does not work to do a regular reverse mortgage. But in partnership with Free Model, by doing the renovation, again, we're estimating this after rehab value, ARV, at $1 million. That's not a 2 times the budget of 125, but still, it's an increase in value to $1 million. We're going to use that same 33% calculation given their ages and current rates. But because the value's higher, that's going to get us $330,000 now, which 60% gets us to 198. So let's keep going. We've got these mandatory expenses of $120,000, right? But wait, we've just added $125,000 renovation expense, which gets us to 245. But Gabe, you said we were limited to 60% of 198, didn't I? I did. However, the reason that this works is because this $125,000 pre-renovation project here, or renovation project rather, is now what we call a mandatory obligation. Okay, it must be paid as part of the reverse mortgage closing. Therefore, we're able to go above and beyond the 60%. Okay, which means not only are we able to pay off the 245 in total expenses, again, the current mortgage fees and free model of 245, but now we also get a 10% bump, which means that they're getting an additional $33,000 of funds accessible at closing. Bottom line, I know it's a lot of numbers and it sounds complex, but the bottom line is in the left column with a traditional reverse mortgage, this renovation is not possible for these clients. But utilizing the renovation and reverse mortgage in combination, we are able to get that done. We're able to pay the full renovation cost, and the client ultimately is able to access $66,000 more equity than they were previously. If you have questions on that, we can certainly answer them as we get into the open Q&A session. But I think it's a really, really important point here that because of the renovation, we're accessing more money, and because the renovation cost is a mandatory obligation, we're able to pay that in full at closing. Some big, big bumps here for the client by doing this partnership. This is just simply a laundry list of strategic uses. I'm not going to go through all of them here with you today. Okay. But I want you just to see different ways that we can utilize the reverse mortgage. And in that last slide, the additional funds and access to funds, whether it's paying off a mortgage, putting that line of credit in place, in-home care, gifting, you name it. Obviously, our primary goal here is for that home repair and creating those safe modifications for folks to be able to age in place comfortably. But keep in mind, it can be used to purchase any other type of real estate as well, creating more and more transactions for you. With that being said, what happens if you come in contact with someone tomorrow that you think might be a good fit? Let's talk through this referral process. Number one, identifying the opportunity. You meet with a potential seller, right? Senior homeowner that's not quite ready to sell yet. They have a lot of equity and their home needs some renovations. That right there, once again, is a perfect referral for what we're looking to do and how we're looking to serve clients. Now, step two, make an introduction. Tell that client you'd like to help them ultimately. Send an email introduction to myself and the client. Just make a simple introduction. That's it. Provide any details to me that you have on that client so that I can be better prepared when I reach out to that client. And as John mentioned earlier, if that can close, you will earn $1,000 toward a co-marketing budget or co-marketing expenses that John talked about briefly. I want to be clear. This is not us giving you $1,000 referral fee. I understand that's a RESPA violation. That's not what we're talking about. Okay. This is from Free Model. That's not a lender. Okay. So again, big distinction there, but you can earn those $1,000 toward co-marketing that John mentioned. And I want to be clear also that if we cannot qualify this client for the renovation reverse, okay, if it's not a fit, guess what? We're going to refer them right back to you and make the recommendation. They might be best off selling, even though that's not what they want to do. Okay. So in many cases, we do get referrals from realtors for folks who want to age in place, but can't afford to. It's not a fit. The home's not right. Whatever the case might be, we're going to qualify that client for you as a sale and ultimately refer that client back to you in order to sell that home. With that being said, that wraps up my slides for today. There's my contact information on the screen. You've got a QR code there as well that'll take you right to my website. We've got some good information there. But again, that wraps up what I wanted to share with you guys today. So once again, thank you for the opportunity, and we'll open it up, I guess, to questions at this point.
So we do have one question that we will be sending a copy of the deck later.
Awesome. Definitely too much to absorb. Well, thank you for stating that. I agree. There's a lot of information, and hopefully you've absorbed some of it.
Okay.
Dave, there's a question here from Tommy regarding who does the appraisal on the property. Can you speak to that?
Absolutely. So, good question, Tommy. It's an FHA appraisal that we do. Okay. We work with an AMC or an appraisal management company on all reverse mortgages. This is no exception. So we're going to hire a local certified FHA appraiser to do the appraisal. And in this process, working with Free Model, we're going to ask the appraiser to give us two valuations. It works similarly like a 203K loan. If you've ever done a 203K FHA rehab loan, we're asking for two valuations: as is value in its current condition. And then we're going to ask for the after rehab value. Again, as John mentioned, we're going to have a Free Model project coordinator come out to the house, take pictures, give an entire scope of work and a budget. we're going to provide that scope of work and that budget to the appraiser to basically give us, again, what their opinion of the after rehab value is, given the scope of work and the budget. Hopefully that answers the question. I guess there's a secondary question there I didn't see either. Or do you circle back with the agents to help establish value? Tommy, with that being said, we'd love your input. We always encourage input if you're available and you have the time to share, whether it's current market value, suggested repairs to bump up the value. By all means, if you'd like to be involved in that process, I know Free Model utilizes their agent partners a lot in their pre-renovation sale process, but we would certainly welcome your input. Thank you.
I would also add, in the scenario that Gabe mentioned earlier, where let's say the homeowner does not qualify for a reverse mortgage, and we refer them back to you, Free Model is also still available to do a pre-sales renovation for your client. So in that scenario, we would do a no upfront charge pre-sales renovation. You'd be able to sell the home for more and also give the homeowner a great exit from the property in that scenario as well.
So it looks like we've got another question. Can a client still qualify if they have a bankruptcy or Chapter 13 bankruptcy dismissed only a year ago? The short answer is yes. So we have to look at their overall credit history. I don't want to dive too deep into the underwriting guidelines here today. Again, short answer is yes. Long-winded answer is they have to have reestablished credit. And we're overall looking at housing expenses and making sure that they've been paid on time. And if not, we can also work with that client to get them approved utilizing something called a LESA, which is an LESA, life expectancy set aside with a reverse mortgage. Again, I won't get into the weeds, but if you have further questions on that, feel free to reach out to me directly.
Great, thank you. We have one feedback for another comment. It makes more sense for it to be an independent appraiser, but thank you for explaining.
Yeah, absolutely. So again, it is an independent appraiser that we're hiring to do that appraisal.
Great. Any other questions?
All right. Well, thank you guys. We really appreciate you coming out to visit today. And thank you, Gabe, for your expertise and Tina for your great moderation. And hopefully if you have any projects, you'll bring them to us and we can chat further.
Thanks, everyone. Thanks, John and Tina.
Bye-bye.
Thank you, everyone. Bye-bye.
Bye-bye.